Investments, it's always a touchy topic, but investments are important in any company. Could be a 1% startup, could be a 30% startup, could be a medium scale business, could be a large company, could be a public listed company. Investments are something that are always going to be a key, either to survive or to grow. Investments are like your annual medical examination. You don't have a choice, you have to go for it, and you are never sure what the result is going to be. But one thing you can be rest assured, there will guaranteed be a prescription. Now, considering that investments are so key and it's such a key topic for us, I realized that everyone must know the real deal behind investments. We are not here to tell you how to raise funds. I'm here to tell you what there is about investing, about investments, raising funds, the good, the bad, and the ugly, to ensure that I'm kept in check. I usually have a guest who ensures that I'm kept in check, also has maybe a different opinion so that we get a better clarity about the topic itself. This episode, we have Mangesh Pandit Rao, who's recently sold his company to Graas, GRAAS, growth as a service. I know there was a pause where I was wondering, wow, there's a company called Graas. Mangesh, why don't you quickly introduce yourself
Absolutely.
to our audience?
Great. So, first of all, Gautam, thank you so much for having me here. My name is Mangesh Pandit Rao. I was the co-founder CEO of a company called Shoptimize, which I founded and ran for about 10 years before it was acquired by Solve, was the acquiring company, and then we were rebranded as Graas. And as you rightly said, it's growth as a service.
That's excellent selling point. It's an icebreaker.
It's an icebreaker. It's the way our new CEO also introduces ourselves. We are Graas, not the one you smoke. So,
do you all are you all headquartered in Amsterdam?
Not yet, but we have global ambitions, as you can say. But yeah, so we are now Graas, which is Singapore headquartered, and Shoptimize was acquired by Graas earlier this year. So a little bit more about myself. Maybe people want to know this, people don't want to know this, but Gautam and I know each other for a really, really long time, since first grade.
Far too long.
Far too long, and some of the things we've done together bond men like none others. And that includes going at each other with sticks. We played hockey. We did not attack each other intentionally, at least. So it's great to be here and to talk about investments. I have seen my fair deal of it over, building Shoptimize.
And that's one of the reasons, you were the first person who came to my mind when we thought about talking about investments. The
Right.
truth, the reality behind investments.
Yeah.
You had a lot of investors in your company. Me, on the other hand, I have been more of don't take on investment until you really, really need it, or you have to grow and survive, or depending on different situations.
Right.
At the peak, what was the maximum number of investors you had in your company?
At exit, we had 67 investors.
67 investors.
67 investors that included 4 funds. So it was an interesting journey. I think it'll take an entire podcast to talk about how I ended up with 67 investors. But I mean, as you know, before Shoptimize, I did run a bootstrapped company with another classmate of ours. We didn't raise capital. I was of the same school of thought. We were of the same school of thought. But somewhere during that journey, I felt like crossing over to the other side, seeing what it is like. And having lived both lives, I am, I guess, in a position to talk about the pros and cons of each. So, happy to answer any questions. Yeah.
So here it starts, right? Typically, everyone has this opinion that you have a startup or you have a company or you need investments. Me personally, I don't think you need investments. First, let's just define what investments really mean. Traditionally, people think investments are, oh, you have to go to a venture capitalist, or you have to go to some high net worth individual, you have to raise some money from family, friends, fools, angels, whoever comes your way, who's going to invest money in you based on trust. However, there is also one more definition of investment. Every promoter invests in their own company, either as debt, collateral, you put your mortgage, your house, your insurance policies, your liver, your kidney, depending on its condition.
I think most importantly, your time, right? You are investing heavily in your own startup in terms of
Philosophical too. Okay. I'm talking about real investments, right?
No. So time is a real investment, and I think every entrepreneur needs to think about it that way. Because if you don't, you kind of lose out on. Sometimes it could be the biggest investment in a company, somebody's time, right?
Correct.
So so all of these happen. I think the biggest reason to take investments, right? And let's start at that, is that it enables certain level of risk taking, right? What I'm saying by that is, if you don't take investments and you're funding your company with either your own money or with the revenues the company generates, you're limited to how many risks you can take, right? Because you don't have that many chances of going wrong and still surviving. I think investment allows you to do that. That's number one. Number two is, if you want to scale a business significantly disproportionate to a market, right? So a market is growing at say 20% year over year, but you want to scale at 200%, and you can for various reasons, and you see the opportunity. That's another reason to do that.
The opportunity cost.
Correct.
So what is the value of the opportunity cost to you?
Correct.
Can you afford to pay from your own pocket for that opportunity, or do you want to use somebody else's money based on your trust and judgment and then scale that high?
Yeah, so I think it's not just about your money or somebody else's money, right? First of all, I think if anybody's thinking about taking investments, it needs to be about what is the goal you have in mind, and how is money a part of achieving that goal. I think that's a very basic starting point. Sometimes it isn't, right? And sometimes people raise money as a validation of their own business, that I raised money so that I could set a valuation for my company, etc.
So that's a good point, right? Here's the interesting part, right? The economy today, especially around investments, is completely diverse into opinions. One is, things like when you're looking at, say, Baiju's,
right?
Or you're looking at a Zomato, they are proudly announcing the depth of the losses that they are currently incurring. At the same time, you're raising huge amounts of money, or you're going public and the people are going, in my personal opinion, berserk at trying to pick up Zomato stock. I think it was a mistake.
Yeah.
And I'm being and this is the idea of the podcast, being very brazen about it. I think it is pretty stupid for an investor to get on, to be publicly listed and saying, I'm going to go after this money, I'm going to go after this company, put money in this company, because they're showing thousands of crores of losses.
Yeah. So I think somewhere fundamentally businesses are built to make money, right? So why do we have all of these businesses that lose money hand over fist and continue to do so as they scale, right?
And proud of it. Sometimes.
Pride, I don't know.
Well, there are lots of companies who proudly say, we are never interested in making profits, because there is also a school of thought which says that if you are profitable, then why would investors come after you? It's wrong. Investors will want to see you grow.
Correct.
So there are, in my opinion, you need money either to survive, it's not a good sign, or you need to scale or grow. If you're looking after growth money, you need to be in a substantially strong position to go after the investors and choose them rather than they choosing you.
Yeah.
You've seen both sides of the story.
Yeah, absolutely. So I think there are more reasons why you need investments, right? Survival, growth are two. But I think if you look at different stages of the company, when you start off and let's say you're doing something that is fairly new, Nobody's done it before. Product market fit doesn't exist. But you believe that it's going to be a big problem in the future and you want to start working on it today. You're usually pre-revenue because the market hasn't really reached there.
Correct.
And you're trying to build something that will be ready when the market is ready and hence eventually, very large. So people who come in at that point are, either coming in for the founder or because they believe that founder is going to do this, or they're coming in for the sector and they agree that that sector is going to be large. But they're also coming
Mangesh,
in.
here's the thing. Very few of these investors at this stage are actually going to go in and see, you know what, I believe that this product is actually going to make it big. It's more about trust in the sector or trust in the founders, where they will put in this early seed
Absolutely,
money.
because at that point the path to success is really unknown, right? Because you don't know what exactly. When we were acquired, we were a very different company from what we were when we raised our first set of capital.
And that's why these kind of the people are called the angels.
Correct. So, and they also understand the level of risk involved. And in addition to the money they bring in, they also bring in a lot of expertise of things they have done before, or people they know, or things that can help you solve problems before they happen.
So that's an interesting point to bring up, right? You haven't spoken about the expertise of the promoters, founders team. What you're talking about is what does the investor bring to the table? And a very common mistake people make when getting investors is, they see the money aspect. I firmly believe that you should be in a position to choose your investors not just because they're bringing money to the table, but you need to evaluate what is it in addition to these funds that you're getting to the table. Connects, contacts, networking, expertise, domain expertise, business expertise. If you have an investor who is looking to help you grow because they're seeing themselves grow, it could potentially be the right investor.
A win-win situation. Yeah, absolutely.
I started off with the example of a medical examination for investments. Let me take it to the next level, and then we'll probably get into a little bit of a debatable, controversial discussion. Like I said, raising investments is like an annual medical examination. Typically, they're going to check your pulse, they're going to check your temperature, they're going to check your ECG and your cardio and see how fit you are, but they're guaranteed going to come back and tell you that, you still need to lose some weight, you have extra cholesterol, you need to work out, you need to do all these things, and next year when you go for that medical exam, you're going to get a new set of prescription.
Correct.
However, what we miss out is that this may be an annual examination. However, investors are like the monthly governance medical examinations. You may have a temperature check with the mouth, but in case your numbers are not getting there, they will not hesitate to use a rectal thermometer for checking. You've been in these uncomfortable situations yourself.
Fortunately, no.
So I'm sure he has to say that.
Yeah, I have to, because I think the thermometers that we had were good enough and we never had to go rectal. But at the same time, so look at it from a different lens, right? We are talking about it from an entrepreneur's lens and when he should raise money, etc., etc. If for a moment you look at it from the investor's lens, why is he putting in money, right? And the first time I raised, of course, I've learned a lot along the way, and the reasons are not always as monolithic as we think, which is he's putting in money because he wants to see a huge amount of returns, which is what, it's a base level for every investor.
Correct.
But there are many other reasons, right? Sometimes they're putting in money because they want to bet on this team and they want to see that, this team really do well. And sometimes even sectors change and problems they are solving change. A lot of things change, but the team stays.
So the value.
Correct.
The value addition that you are going to bring to the market, to your consumers, to the business, to that sector. Right?
So again, coming back to why these investors are investing, some of them are getting in because they want to understand this sector very closely through the startup. So they may be in an allied field. They may be, like I had some investors who were in very high ranks in very large retail companies, but they wanted to know what's going on in India. They wanted to know what brands in India think about, and this was their window of learning that while being a part of the cap table and being investors.
So basically, get into the ecosystem. To understand the ecosystem.
So that's another motivation.
Pay that.
Correct.
Pay
so it's like So that's another motivation, and there are multiple such motivations. It's important for an entrepreneur to understand why this particular investor is coming in. And it's very difficult to understand that, and sometimes that creates a lot of issue because you feel like, hey, we are growing, right? You should be happy, but maybe that was not the intent of that investor in the first place. So you need to kind of understand and figure out who they are. Plus, you have to understand that every investor has a certain part of the journey, right? I mean, there are very few investors who invest in an idea and a couple of people. They are usually not the same as people who will invest when you're growing. Yeah, absolutely. When you're growing from the 100 million to the billion mark.
Any entrepreneur always has difficulty in letting go of the control, the direction. And control is one of the key factors that things actually break. A lot of founders pick up the stress, get frustrated, quit, untimely exits because of the tussle between the investors and the entrepreneurs for control, for direction.
Yeah.
You might want to go in a certain direction because that's your ethos.
Yeah.
But an investor might actually look in a different direction and say, you know what, that's where the money is. And if you all are not aligned, it's a recipe for disaster.
Yeah. So I think that's clearly, when you brought in the wrong investor who...
But you don't know who is the wrong
don't-
investor until it's far too late in the game.
Yeah, I mean, I agree that sometimes when you're bringing people in, you don't know how it is going to be. But I think sometimes control is overrated, right? So to give you a simple example, at the time of exit, I don't think, the founders of Shoptimize had controlling stake because we had raised capital over time, etc., etc. But at no point did we believe or feel like we were not in control, right? And there are multiple reasons for it, right? The reason you're in control is not because you hold a certain number of shares in the company. The reason you're in control is because there is nobody else in the world who can give more to this business and this company than you can. And as long as you're that person, you're in control. If you're no longer that person, you're not in control, right? It's as simple as that. But when you're giving up control, it's also a good thing because you bring in contradicting opinions into the company, and one of the jobs of the CEO or the founder is to be able to triangulate all of this information and go in the right direction. So some of the things that I personally have been guilty of is listening to the investors too much, right? Because I had taken in capital and I thought it's their money, and I always looked at it as...
You're trying to be the nice guy.
It's not necessarily the nice guy. I was always looking to learn, and I always believed that other people knew more than me, which sometimes is not always the case.
Yep.
So I think as a founder...
I have exactly the opposite problem.
I know that. Who knows it better?
There are times when you feel, you know what, I know what I'm doing and I want everyone to follow.
Yeah.
And it causes a lot of issues. But this is entrepreneurial journey. This is how it's going to be. If an investor looks at a future financial driven economic downfall and is asking you to cut costs and lay off people, there has to be a line where you draw where you need to be either on one side of the line, aligned or misaligned.
Yeah.
It can be a make or break for a company.
Yeah.
And in most cases, the founders don't call that shot.
That's not true, actually. It depends on the stage of the company also, right? When you're looking at really large publicly traded companies, stock markets, this and that, I think there are so many different stakeholders that there is not one or two people making the calls, right? There are some exceptions, but as you grow larger, it's not one or two people making that call.
It's a group of people who are going to make that call and take it.
So every company, they have a board for that reason. They, it shouldn't, like, at least in my 10 years, we never had to go to a vote. But if it does, you should be willing to go to a vote and be willing to win or lose based on, how you present your case to everybody, right?
So to put that more in perspective about exactly what you're saying is, typically people think I have to run a company and I have to get some investors. And every time an investor is asking for a board seat, things like that, or seats.
Yeah.
It depends on that dynamics where you need to align how your board is structured.
Correct.
And you need to be in a position where you do realize that there are majority of the people running the same ethics, the same ethos, the same direction.
Correct.
More often than not, a lot of people run after the monetary factor in the investments while relinquishing control over the board.
Yeah.
And you realize after some time that I have no more control left.
Yeah.
So the balance is important.
Yeah.
So remember that the board of directors is there for a reason. The executive committee is going to run it. There could be a board which appoints a CEO and executive committee to run this. You need to be party privy and in agreement with that decision. Otherwise, these are recipes for disaster.
Yeah, absolutely. So, how do you construct your board? See, the one way to look at it is as a founder, you're always a minority in a board as soon as it's a 3-member board, right?
Yep.
It's not so much about who, what, where, but it is about being able to convince, persuade, take contradicting opinions, also be able to compromise in certain cases. If you wanted A, somebody wanted B, and it happened the last 2-3 times that you got your way, but this time you're willing to try something out, because it's not just about doing what you think is right, which is very important, but at the same time the board wants to see that you're open to opinions, you're open to try out things, you're open to set up, okay, I do not necessarily agree with this, but I'm committed to trying this out. These are the 5 things we're going to do. If these happen, we scale this or we shut this down. Do we all agree? And then giving it your heart, although it was not your idea. So these are things that define, the quality of founders that
You'll be surprised, Mangesh. These are things nobody talks about. This is one of the reasons why we had this podcast.
Yeah.
That we need to get out the real deal for people who are trying to raise money or people who are trying to get in larger investments.
Yeah.
That the importance of a board,
It's
your
extremely
place in the board,
important.
and ensuring that your entire board is aligned to the decisions which are taken, which need not be yours.
Yeah.
And then we all drive towards a common goal. Suppose you have a company which is maybe 3 years old, maybe 2 years old, or maybe 25 years old. How far are you looking after the team? And I don't mean in terms of salary, you have to pay a salary. That's what your dues are, your work's worth.
Yeah.
In addition to that, how do you make that team a part of the ecosystem, a part of the stakeholders?
Yeah.
ESOPs.
So absolutely. So there are all these instruments, right? There are ESOPs, there are RSUs. Like we brought in a third co-founder in our second year of existence, and it's not very common to do that. So you bring in people, you make them a part of your journey, and you share the responsibility of doing this, right? Along with the potential winnings. So there are instruments, but I think bigger than instruments, what I have seen people struggle with is the mentality of it being a team, right? So, and you see this in sports.
The culture.
Absolutely. It's not just the culture. You see this in sports all the time, right? You could be a great individual performer and you are jumping around everywhere. You want to score every goal. You
But
want
your
to
team
stop.
always loses.
Yeah. So, but at the same time.
We've seen that happen.
Yeah, but we never lost. We rarely lost. That's a different part of our team. But nevertheless, it is how you make the rest of your team members feel in terms of how much they are a part of this journey, right? And there have been situations where you might own significant stake. You might be one of the co-founders, but you still don't feel like you're part of the journey anymore. Right? And there are other cases where you could have a very small piece of the company. But your opinion, yeah, exactly. So that feeling matters, and to be able to nurture that feeling in a team is one of the least spoken about skills of an entrepreneur, right? To make 20, 100, 50 people, 500, 5,000 people feel a part of the journey. Yeah.
Entrepreneurship, setting up a company, starting a company, scaling a company has never been easy. Investors are help you along the way. Sometimes if you're able to choose the right investors and get there. Mangesh, it's been great having you on this show. I enjoyed our discussions, however awkward they were sometimes. And I'm pretty sure that the next time you go for your medical examination, you're definitely going to remember this podcast.
Yes.
So thank you very much for being on this podcast. It was a pleasure talking to you.
Same here. Thank you so much. Yeah, thank you.